To me, this is not unexpected. It pretty much sort of moves along the lines that was indicated on the last occasion. The really redeeming factor is how large the impact and coverage of the nil or zero rate is going to be, and the 5%. And the fact that everything in the CPI will end up there, I think is really good news in terms of all the apprehensions on inflation, etc. Coming from there to the 12 and the 18, to my mind, this is where you will see your pharma and other products sort of basketed into that sort of a rate. And coming then to, where you are going to be at the 28, and the sense that all white goods are going to go there, we must bear in mind sort of one situation, that once we see this whole rate structure, you compare it with the fact that if you took the opposite tax burden that products suffer today, and that range being between about 22% to 34%, when you see these rates in the background of that, we must realize that, apprehensions in terms of how prices will get impacted or will there be greater tax outflows really need to be placed in context, that in any event, I would think a majority of products, we are going to see a situation where the tax burden will be lesser. Coming to the 28 and then coming to those 4 products which will also suffer a cess, I mean, traditionally and consensually, those are your categories that people feel should, suffer higher tax. So I don't think you're going to get too much debate or too much boost on that. But to me, the big news is, the wide coverage of the 0 and the 5.
Okay. Mr. Shah, we've got Sunil Duggal back with us. Mr. Duggal, I just wanted to ask you, overall, listening to what the FM said, do you get the feeling that you will be largely tax neutral? You are going to see some of your products also perhaps go to the 12% category if what the finance minister said is to be taken on board. Will you be largely tax neutral, you think?
See, I don't know exactly what the FM said, but if some of the cosmetic items move to 12, we will be definitely advantaged.
Okay.
But we still have to wait for that to be clarified.
Okay.
I think that the larger issue for us would be that where will fruit juices and honey and Ayurvedic products go? Will they go in the current at 5% as we hope? Or would they attract 12%, in which case that would be also damaging.
Okay.
So honey and packaged fruit juices and Ayurvedic medicines, both patented and generic, really, this is where the true impact lies.
And what's the current excise plus VAT on those products?
On honey, we average around 4. On juices, around 12. Ayurvedic is either totally exempt or charged at around 5, average of around 5%.
Okay.
So it ranges at around 5 to 12 in these categories, and that is really what we are looking out very closely for.
And finally, Mr. Duggal, we have a group of tax luminaries with us, but just to ask you, how clear are you on the software? Do you think you're good to go on April 1st?
I think so. I think there's been a lot of work which has been done behind the scenes, not much publicity. And from all indications, again, I'm not privy to the workings of this particular area. But what information we have got from our consultants, etc., speak about a very high level of preparedness. Now, there would be obviously a fair amount of chaos in terms of implementation, but that would not be fault of the software or the entire team management. That would be because of the disaggregated nature of our trade and our industry, whether they are going to be GST ready. I think a lot of them may not be. So there would be some upheavals starting April 1st.
Let me just bring in a quick comment as far as tobacco is concerned, because from a listed company's point of view today as well, we saw a fair degree of volatility. And I'll bring Hari in on this conversation. Hari, the rates have not yet been specified, but the principle is that the de facto demerit rate is 28%. So if cigarettes are currently taxed at about 65%, then it's 65 minus 28, which will be broadly the cess that will be levied. And as I've been pointing out, and it's now been confirmed by the finance minister, that they don't want the tax incidence to jump higher. It will pretty much be a status quo. It's only the structure of the taxes that's being changed by way of this cess. So would that be accurate to suggest that the cigarette structure will follow the principle that I've just articulated?
No, you brought up a very, very critical point, Shereen, and the best example is tobacco. Like you said, today tobacco VAT plus excise is in the range of 75%. Now tomorrow, if you apply tobacco, and for a minute, if you take cigarettes as an example at 28, then fundamentally, if you apply cess over and above that, then what happens to the excise? Because central excise in the current GST model on tobacco and cigarettes is expected to continue at the current rate. And that is where the maximum collection is, because there is still a huge amount of evasion in the entire tobacco industry as far as the VAT is concerned. So I'm a little confused about, if you apply cess on 28, will it then mean that you are going to reduce your excise? Because time and again, whether it's the CA or the finance ministry, they're saying that the current incidence will be maintained. So that's something which I'm not clear about, because in any subject, you today in tobacco, and tobacco becomes very unique because tobacco continues to suffer excise even in GST. So if they make a 28 tobacco, then the cess, if it is over and above cess, then the excise has to go. Because you can't have cess and excise, which means you fundamentally are raising the rate, which is not what the overarching principle of what the council is saying. Or
I'm reading out to you, Hari. I'm reading out to you verbatim. I'm reading out to you verbatim what we were told. We are putting nothing extra on tobacco. Nothing will change. Only the structure will change. That I'm reading out to you verbatim what we were told.
No, if that is true, then what might happen is that they may put 28% GST rate, and they may put a cess, and then they will iterate that excise rate. So something of that nature will happen if they maintain the incidence to be same. Again, coming back to that car discussion we were having, I don't know whether we can really take too much cognizance about the 28% rate that the finance minister stated, because I'm sure the jury is still not out on that.
Yeah, let's bring in a quick word from Arun as well. Arun, you've been listening in on this conversation. What's the headline going to be on Tax Sutra?
I think the industry anxiousness, I was just trying to work the phones, spoke to a couple of people. I spoke to someone from the aerated drink sector, one of the top 3 in the world, and who have a big presence in India. And he said, this is what I'll quote him: the levy of cess is counterproductive. Anything non-senvatable is also is counterproductive. 2 or 3 quick points. Number one, with the rates, if they're clear on the rates now, if they've agreed on the rates, it's now a fait accompli, given that the GST bill is now going to be passed as a finance bill or otherwise. It will get passed now in the winter session. So we are probably closer to the April 1 deadline. If not April 1, at least June 1. But we are very close to that April 1 deadline. And number 2, is the finance minister's persuasive skills seem to have worked. Even till a week back, we were not sure whether this will work out or not work out. I think we have to look at the cascading effect of tax. I think finally what we are looking at, just see, dual structure, 4 rates, 50% items exempt in the CPI basket, potentially dual control, and a cess. Someone yesterday said that, the Tata Mysteries PAT is a field day for lawyers. Believe me, Shereen, it's already a field day for consultants. And the headline probably ought to be on Tax Sutra that many of the consultants are tripling their indirect tax teams.
Well, that certainly seems to be the case at this point in time. But let's go back across to our guests now. And Mani, as we will still have to wait for details on what falls under which basket and so on and so forth. But I think the government is very mindful of the fact that they don't want this to be inflationary, which is why they said that let's go for the cess route and let's not hike the tax incidence. Given that, and given the fact that this is a government that has sort of played on the aspirational India card, the aspirational India sentiment, how do you see this classification, being done, and what do you think will be the challenges thereby?
Shereen, I think to say that the purpose of the cess is to make it non-inflationary and to equalize the tax may not be a right thing to say from a tax point of view, because it's only when you have a cess that you lose the credit on that, and it tends to become a little more inflationary. So cesses have always had a cascading impact in the past because there is no credit available. If the intention was to ensure that this is non-inflationary and the collection of taxes is exactly what it was before, possibly we should have had a higher rate of tax, which has not been resorted to on account of various reasons. On the other side, if we are looking at a 4 tax rate structure and we are looking at cesses for at least 4 different products, then at the beginning of the GST structure, what we are looking at is 8 rates of GST including cesses, of which 4 are going to be creditable and 4 are not going to be creditable. There are going to be quite a few concerns in respect of the existing taxes which are levied on this product, and I believe that to a large extent most of the CFOs would typically be working now on what would be the predictive rate which they can expect in GST. Okay. So even before the Committee of Secretaries comes out with their report, I believe most of us, and I mean there was a reference to a consultant, that's what we all are, most of us would typically prefer doing some kind of a simulation because the number of rates are not so large that you can't do a simulation. They are not that many rates, and with a 12 and 18 and a 26, it is possible to do some kind of a simulation to say what happens if I get categorized at 18. Okay. What happens if I get categorized at 26? What is the worst case for me? What is the best case for me? And between the worst case and best case, what steps can I take from now? Okay. Do I need to make a representation? Do I need to do advocacy? Do I need to pray to God and just wait and watch? Okay. So what do we do in that interim?
We have a CEO with us and who has a wide range of products, some of which are not taxed at all, as he said, Ayurvedic products. Mr. Duggal is with us. Mr. Duggal, what do you see as the upshot? Classification problems, lobbying problems, because people wanting to go from this category to that. What can be the negative for you?
I think, this category hopping would be a huge issue, and I hope there is enough clarity on the detail so that the amount of litigation and the amount of uncertainty is absolutely minimized. That is absolutely crucial, because with such a diverse range of slabs ranging from 5 to 28, there would be obviously huge pressure on everybody to move to the lower rates. So the clarity has to be there, and that's very, very important. Other than that, even if the rate is at 28 for certain items, it's a level playing field. Everybody has the same products and pay the same tax. So I think, competitively speaking, there won't be any big change. There could be price movements up or down, but I think it'll balance out. But the description of what falls where is critically important.
We have reached a definitional moment in our GST journey. As Arun very correctly said, now it is going to become law, and probably going to become law and applied as early as April 1st. There is a reasonable amount of clarity on, what the structure is, though you'll have to squabble about which good is in which category. Mr. Duggal, net, are you a relaxed man today? Do you think you are stepping into a better regime?
No, I think I'll be relaxed only when the final details are out, because like I said, many of the categories which today enjoy fairly low levels of tax, if they are suddenly raised to a much higher level, that would be an issue for us. So I think broadly we are satisfied with what's happening, but we would like to see the final details before making a comment.
No, but you are the person who has the largest amount of unbranded category competition. Would you say that now with this, with GST coming in, probably, you will find yourself in a better position. You will find more goods coming into the tax category, like the experience in VAT. Do you think we are in for a positive experience in GST with the net being extended and therefore the government drawing more money?
Yes, I think there would be a definite improvement in our competitive position vis-a-vis the unbranded players. But how much are the upsides to that? It's difficult to measure. I think, many of these products which are of a very low price are really bought by people who can't afford the more expensive products. So there will be issues in them upgrading to products which companies like us sell. So the real issue would be that how much of the input credit we capture, what is the net sales, the GST outflow, and how smoothly does the whole business's processes move.